Hello traders, the title of the video is Technical Trader Explains Cup and Handle chart pattern like never seen before. Alright, let's get started. So what's happening? So you have been using the cup and handle chart pattern before. You know it, you understand it, alright, and you are thinking there's nothing new that I can share with you today. However, I would like to encourage you to watch the full length of this tutorial so you may understand what is happening right here. Alright? We will be talking about Fibonacci, we will be talking about a price structure, and we will be explaining the cup and handle chart pattern like never seen before. Alright? So we have two components for the cup and handle chart pattern. So the cup is this one here, when the price will perform what we call, 180 degree turn or minus positive or negative, 180 degree turn, see here, going from the starting point to the starting point. What is happening, my friend, is that during the first phase or stage of the price, the bearish traders are the dominant force. So here we are, they are dominant force. They bring the price down to the lowest point of the cup. So because when we are trading, we want to know who is controlling the price move. In an uptrend, the bullish traders are controlling the price. In a downtrend, the bearish traders are controlling the price. But when we are talking about the cup and handle chart pattern, we want to understand what is taking place so we can make excellent decisions because it's a powerful bullish chart pattern. Alright? The second stage of the cup and handle chart pattern, the bullish trader will take the price up again and bring it back to the starting point. So normally we will say that here people were selling. So we will say at this level, this point and this point is this line here, people are selling. So, but as people are selling, if the price reaches this level, people are buying at the bottom of the cup. So at the top of the cup, there are sellers. At the lower point of the cup, there are sellers. But you have to understand what is happening here. There is a change right here. The bearish trader was selling, and then they transfer the authority or the control to the bullish traders. So we can say that there is a balanced market, alright, during the cup and handle, formation, or during the formation of the cup and handle chart pattern. Bullish traders control it, bearish traders controlling it first, and then the bullish trader take over. So equal force on both sides. So now as the price came here, we know that we cannot say completely that the bearish traders are controlling the market. We cannot say that the bullish traders are completely controlling the market. We will say that there is a balanced market. So as the price returns to the top of the cup right here, we have a balanced market, yes or no? So it's no more dominant for bearish as such, it's not dominant for bullish as such, it's both. So now that the price starts coming down from here, where will it reach? It will reach the midpoint. What do I mean by that? It will there is a high chance that there will be a transfer of control of the price at the midpoint of the cup. That is the portion that we call the handle of the cup. Because we have a balanced market, the bearish traders and the bullish trader have equal force during the formation of the cup. So they bring it from here down to here. The bullish trader bring it back to the starting point. So we can say it's a draw match, 1-1. Alright? Now price start going down here. Our expectation will not be that the bearish trader will bring it all the way down here unless the bullish trader have capitulated. They will not, because they bought it. They will try to buy again. So now the consensus or the agreement point will be the 50% Fibonacci retracement level of the cup. So that's why when we have the cup and handle chart pattern, after the cup is formed and the handle is developing, we are watching the zone between the 50% and the 61.8% Fibonacci retracement level of the cup. So the best approach to highlight that zone, all right, I'll show you in a minute, is, hold on, please, am I doing the correct thing? Hold on a second. The best approach to highlight that 50% and 61.8% Fibonacci retracement level of the cap is to apply it to the bullish session. So here, you see, price form a kind of a double bottom with a higher low here, and the bullish trader brought it all the way here. So as the price is pulling back, all right, so the bearish traders who sold it here are trying to sell it. The bullish traders allow them to do that, but as the price comes to the 50% and the 61.8% Fibonacci retracement level, Fibonacci zone, there are buyers here. Those are aggressive Fibonacci traders. Doesn't mean that all the time, if we have a cap and the price comes to the 50%, the 61.8% level, it will definitely find support. All we know is that there will be buyers. Now, as a technical trader, we will be looking for trading setup, monitor the candlestick pattern, monitor the reaction of the price, monitor the structure of the price. So I said to you, we'll be talking about Fibonacci retracement, we'll be talking about price structure. If you look carefully, this is very, very important to look at this price structure that is bringing the price into that 50% and 61.8% level. Now, for new traders, when we are using words like price structure, we are not talking about, okay, that the price went down or went up. Is how the price did go down. How did the price, okay, did go up. This is about the structure. So if you look at the structure here, the price went down. Now the question is, how did the price went down? It went down in 3 moves. For traders that are more advanced, we know that the minimum price move is 3. This scenario is very interesting here because everything aligned beautifully. So here you see this candlestick bar came down with a tail in that zone. The tail is indicating a support zone. The shadow highlighting, okay, a resistance zone, shadow, tail, support zone. So here this one got a bit of tail. Now, if you are more experienced trader, you will use a top-down trading method. After analyzing this price structure, minimum price move is 3. We draw the line. We are in a zone, Fibonacci retracement zone. Or I will be saying priority to bullish signal above that Fibonacci retracement zone and priority to bearish signal below that Fibonacci retracement zone. I need to remind new traders that the zone between the 50% and 61.8% Fibonacci retracement, that zone is called the sweet spot zone. So when you are watching a video, a trader talking about sweet spot zone, they are talking about the zone between the 50% and 61.8% Fibonacci retracement level. But now we have a conjunction of a price structure, minimum price structure, bringing the price into that sweet spot zone. We know for sure that there will be buyers, but we cannot say that the price will definitely find a support there. Only thing we know is that there will be some buyers. And we want to monitor the price and use different time frame trading method, okay, to participate in the trade if you have a huge demand to buy. Another way you can monitor the price action here, you can, apart from the minimum price move, one can also monitor, okay, the volume spike, okay, a little bit, just a little bit here. Can you see that? A little bit spike here. Above, you see the blue line is the moving average 50 of the volume bar. A little bit of spike, not much, but 282 million share, all right, above the average of 211. So a bit of spike here that will also give us. And now we monitor. Look at this. It's a nice setup, by the way. This is what I call multiple authentication using different technical tools. All right, now hold on, please, traders. If you look at the RSI, you can see that at that point in time, okay, the RSI breaks above its own bearish trend line. Are you a subscriber to Day Pro Trader YouTube channel? Well, check the playlist about RSI trading. I talked about all this already. So now here it is. It's a bullish indication. So we have a bit of a volume spike, RSI breaking above its own bearish trend line. And now we have a price structure, 1, 2, 3, minimum price moving spring. This candlestick bar here got a tail. More advanced trader will now implement top-down trading method. If you are swing trading, you say monthly chart, daily chart, looking for the signal on the daily chart and entering the trade on the hourly time frame. Now, those are the traders who created that tall bullish candlestick bar. Those who are using the top-down trading method. So, at the beginning of that month, they enter the trade on the hourly time frame after identifying a clear-cut signal in this zone on the daily chart. So, those are the traders that were participating in this tall candlestick bar. If you are not agile or more advanced or do not know how to master a different time frame trading method, you will have to wait, because you will see this tall candlestick bar plus this one, and you will say we have a bullish engulfment. But those who enter before enter the trade at the best place at a low risk entry point, but it's not too late after that candlestick pattern, bullish engulfment. All right. You will now go to the daily chart, try to find another signal to buy in this zone after that bullish engulfment, and take it up from there. All right. Very simple. So, balanced market during the formation of the cap, the bearish trader dominates the price action during the first stage of the formation of the cap of that cap by 100 chart pattern. The second stage, the bullish trader took over. A prior returned back to the point where the bearish trader was selling. Those bearish traders who sold it here did not forget. They come back again trying to sell. But now, because they are not the only one controlling the market, the bullish traders are waiting for the price to come to the sweet spot zone, which is the best place for them to buy. Now, doesn't mean that the price will definitely go up forever. Is to monitor whether those are serious buyers here. We can use a different authentication, looking at the price structure that brought the price into the sweet spot zone, and we will also monitor, for instance, the momentum oscillators and the volume bar. Now, for more advanced traders, if we are talking now about predictive fractal pattern, all right, so which has nothing to do with the general topic about fractals, all right, I talk only about predictive fractal pattern, the Benoit Mandelbrot. So, you too say Benoit Mandelbrot, you watch videos about predictive fractal pattern. All right, I have some videos at Day Pro Trader YouTube channel, a web page that is titled Predictive Fractal Pattern, all right, or fractals. All right, so what is happening here? We have a bigger cap. You see this one? It's a bigger cap that is formed. Okay, that pattern is in place. Now we have another smaller cap. Here it is. Another smaller cap. So I'm going into more advanced topic. For traders who want to familiarize themselves with predictive. So this is the smaller cap, okay? So if the price is forming another handle here, where will we expect that handle to be formed? So if we are talking about predictive fractal pattern, we will say that if a handle is being formed after this smaller cap, it will do something like this, similar to the first one. 1, 2, 3. I'm not saying that there will be definitely a handle into the zone of 50%, 61.8% Fibonacci retracement of the price action from here, where my cursor is, to here. So as it was before, for the bigger cap, we will use what has happened before with the bigger cap to predict what is likely to happen with the smaller cap. This is about a predictive fractal pattern. Something has happened in the past. A structure was in place before in the past. We recognize the structure, All right. If a similar pattern is developing, we can use the previous pattern to forecast what is likely to take place. This is about predictive fractal pattern. Now, some trader will say, Joe, you just say to me that the price will come down like this and go back like this. No, the price can just go up like this. Because here, people are selling here, and people are buying here. Okay? Now, you can see that here again, you see, first phase of the curve, the bearish trader were dominating the market. Second phase, the bullish trader are dominating the market. Look at the smaller curve. The first phase of the smaller curve, the bearish trader were dominating the price action, like here. The second phase of the smaller curve, the bullish trader are dominating the price action. If the bullish trader do not manage to push it above the neckline of the curve, we may have a similar scenario when the price may come back down to the sweet spot zone. No, so now then it will be forming. So one thing we can do also is to draw a trend line like this. So very often, this is what I'm talking about all the time. When today are using one method, now we are talking about cup and handle chart pattern, today will forget about drawing simple trend line. So now we connect this point and this point, we have a trend line. Will it come here? Okay. Or will it just pop out first, straight away, and come down here before going up? That's another scenario. Or will the bearish trader bring it back again to the starting point before we start again? In all cases, all we are looking for, this is a hot spot trading zone where people did buy. There will be another hot spot trading zone right here on the edge of that level. All right. At this we conclude our discussion today about a technical trader explain cup and handle a chart pattern like never seen before. Have you ever seen something like this before? Yes, of course, George. You are just making all kind of blah 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 here. All right. If you don't like it, mark it down. If you find it useful, all right, give us the thumbs up. All right. If you think that this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about a technical trader explains cup and handle chart pattern like never seen before. If you want to know more about the cup and handle chart pattern trading, click on the link below in the description section. That will help you to master the cup and handle bullish chart pattern. Happy trading to you all and speak to you soon.